America's next target has been revealed: to blow up all the global markets. In previous videos, we discussed the impact of the Iran-US war on the global economy. But this time, we want to look at other countries, their resources, food supplies, and what could happen to the world if this war continues. We talked about how a regional conflict broke out and led to the closure of the Strait of Hormuz. But today, we want to have a geopolitical analysis regarding the energy market and the global economy. But the issue military analysts are discussing now is whether this ceasefire between these three countries is a Schrödinger's ceasefire or not. What does a Schrödinger's ceasefire mean? It means one day there's talk of war and the next talk of a ceasefire and the end of the war. Everything is contradictory. 2 months have passed since the Iran-US war, and we've seen this repeatedly. One day Trump talks about a ceasefire and the next about the destruction of Iran. This very instability is one of the main factors causing shocks to global markets. Regarding the Strait of Hormuz, we discussed that 20% of the world's oil passes through this strait. So, in this regard, it is very important. This ceasefire that we are witnessing, given all of its contradictions and complexities, is causing the strait, which is known as the world's main oil artery, to close or open, but only for very short periods of time. Naturally, this has an impact on market candles, oil prices, and the global markets overall. But the crisis we're seeing now is far greater than the crisis of the 70s. In 1973, we saw the Arab oil embargo, which caused a 400% increase in prices and stagflation. In 1979, we witnessed the Iranian Revolution and a 100% increase in prices. But 2026 and the potential permanent closure of the Strait of Hormuz is more significant than the previous two crises and is a far larger crisis. We face the threat of global stagflation. The International Energy Agency has warned that this crisis could even exceed the oil shocks of the 70s, crises that led to stagflation. The combination of these two is the worst possible scenario for any economy: high inflation and zero growth. But what impact could this have on people's livelihoods? What does oil have to do with people's dinner tables? The effect of this crisis isn't limited to just energy. Many of the raw materials for chemical fertilizers are supplied from this very region. A shortage of chemical fertilizer means limited access to the region's raw materials. A decrease in agricultural production causes harvest times to be delayed, and ultimately a sharp increase in food prices puts direct pressure on developing countries. But if this war persists, the United States and Europe won't be safe either. We've discussed the short-term and medium-term effects of the war on Europe and how it will be the main loser in this game. But for the United States as well, the longer this war lasts, the less it will be in its favor. It has chain reactions. Higher inflation, increased transportation and production costs across all sectors, reduced purchasing power, and direct economic pressure on households. Instability in financial markets, and severe fluctuations in the stock market and global securities. A decrease in global supply will ultimately lead to an increase in global prices. Oil is a global commodity and its price isn't determined in a single market. A supply cut raises prices for everyone, and then there's the challenge for the dollar. In previous videos, we mentioned that the DXY dollar index has increased. But if the war drags on, the dollar will also face challenges. Its geopolitical consequences, if the war is prolonged, will be the weakening of the dollar's position as the world's reserve currency, strengthening China's position in the international system, pressure on the United States Treasury's credibility, and the acceleration of de-dollarization in emerging economies. Oil trading will be conducted in yuan. Iran has announced that transit oil must be traded in currencies other than the dollar, especially the Chinese yuan. This decision is a serious challenge to the historical dominance of the petrodollar, a system that has been one of the pillars of America's economic power for years. If this trend continues in the long run, the global financial structure will collapse and undergo a profound transformation: the yuan instead of the dollar. But why are China and the yuan considered the most prepared players? First of all, its strategic reserves. Creating the world's largest strategic oil reserves in recent years, renewable energy, and extensive investment that reduces dependence on fossil fuels. Electric vehicles, global leadership in EV production and consumption, reduced fuel needs in China, the yuan market, and capitalizing on the shift in oil payment systems to Chinese currency. But I emphasize all of this again only if the war between Iran and the United States is prolonged. But this is just the beginning of the story. This war is not merely a regional conflict. Its effects are chain-like, affecting everything from the energy market to food and from inflation to employment. Short-term, oil price spikes, energy inflation, and market instability. Medium-term, food crisis, stagflation, and pressure on purchasing power. But long-term, a shift in the global financial system from the dollar to the Chinese yuan, the decline of the petrodollar, and a redistribution of power. Power is transferred from number one to number two, and China could take America's place in the long run. So naturally, this war must be settled, and in a very short period of time. It doesn't matter which country you live in. This crisis affects you in some way as well. Thanks for watching until the end of the video. Like the video, subscribe, and hit the bell icon so we can upload the next videos for you more frequently.